Welcome to a special Talk Tickers edition of our Deep Dive.
Yeah, really excited to get into this one today.
So our mission today is to break down the NetEase Q1 2026 earnings call. And we are looking specifically at what this means for you, the retail investor.
Right, because earning transcripts can be incredibly dense.
Exactly. So we are going to be super data forward here. We'll use plain language to cut through all that Wall Street jargon.
Which there is always a ton of.
Oh, absolutely. And we're going to take a real opinionated stance on these results. We want to give you actionable takeaways, whether you're holding the stock right now or just considering it.
And we want to keep it punchy. We're going to hit the big numbers, the story behind them, the guidance, and then the ultimate bottom line.
Right. And here's the hook for today's deep dive. You have a 2026 gaming market that is just hyper competitive.
Oh, it's brutal out there.
It really is. But NetEase isn't just surviving. They are actually breaking concurrent user records on games that are literally over a decade old.
Which is practically unheard of in this space.
Right. And at the exact same time, they are cracking the code to Western markets.
Yeah, the dual threat execution here is really what defies the current macro environment.
It totally does. Okay, so let's unpack this. We're going to start with the first core pillar of our Talk Tickers format, which is the headline numbers.
Let's get into the financials.
So right at the top, NetEase reported total net revenues of 30.6 billion RMB for the first quarter of 2026.
And just for context, that translates to roughly 4.4 billion US dollars.
Exactly. Now, that marks a 6% increase year over year.
Yeah, and if we drill down a bit into the games and related value-added services segment, that's the VAS segment, they brought in 25.7 billion RMB.
Which is up 7% year over year, right?
Yep, 7%. And their non-GAAP net income was rock solid. We are talking 11.3 billion RMB, or about 1.6 billion US dollars.
Wow. Okay, so that translates to some pretty strong earnings per share, I'd imagine.
It does. The non-GAAP basic earnings per American Depositary Share, or ADS, came in at $2.56.
Okay, so those are the baseline numbers.
Yeah.
But there's this one metric in the report that I really consider the aha moment here.
The gross profit margin.
Yes. Exactly. I mean, the gross profit margin saw this massive leap. It jumped from 54.1% in Q1 of 2025 to a staggering 69.4% in Q1 of 2026.
Which is a huge jump for a company of this size.
And wait, for the games segment specifically, gross margins actually hit 74.8%.
Yeah, that number is wild. So let's just break down what gross profit margin actually means for your wallet if you're an investor.
Please do, because it sounds good, but what does it actually mean?
Well, basically, for every single dollar NetEase makes in its gaming division, it is keeping about 75 cents.
Wow, 75 cents.
Right, and that's before they even account for operating expenses.
That is software as a service territory, honestly. That is not normal for traditional game publishing.
Not at all.
Yeah.
And the reason why this happened is really important. Management specifically noted lower revenue sharing costs related to the platform.
Okay, so what does that actually mean in plain English?
It means NetEase is keeping more of the pie instead of paying out distribution platforms. So think about the huge fees that app stores like Apple or Google usually take.
Right, that infamous 30% tax.
Exactly. NetEase is successfully retaining the full value of its digital economy right now.
You know, it's kind of like a restaurant, right? Imagine a restaurant that suddenly negotiates its rent down by half, but they're simultaneously selling even more food than before.
That's a perfect analogy. It is a massive lever for profitability.
But I do have to push back just a little bit here.
Sure, go for it.
I look at that 6% top-line revenue growth, and is that actually exciting? Or is this massive margin expansion kind of masking what is essentially slow growth?
That is the million-dollar question, right? Because margin expansion eventually hits a mathematical ceiling. You can only cut costs so much.
Exactly. Eventually you hit bone.
Right. So to answer whether that top-line growth is sustainable, we really have to look beneath the hood at the actual games driving these revenues.
Okay, let's do it. Let's move to section 2, the story behind the numbers.
So their portfolio strategy right now is essentially a barbell strategy.
A barbell strategy, meaning they have two extreme weights on either end.
Exactly. On one side, you have the legacy cash cows, the domestic MMOs that have been around forever.
Right.
And on the other side, you have these aggressive global breakouts.
Okay, so let's scrutinize the heavy side of that barbell first. The legacy games. The transcript highlighted Fantasy Westward Journey Online, or FWJ.
Yeah, FWJ is fascinating. This is a legacy PC game.
And it hit a record peak concurrent user base of 3.9 million in Q1. 3.9 million players.
And its highest ever quarterly revenue for a game that is, frankly, really old.
I mean, we're talking about a game that launched when dial-up internet was still a thing.
Exactly. And the mobile version, FWJ Mobile, just hit its highest daily active users since 2017.
That's incredible retention. And then there's Ghost Story Mobile, right? They just celebrated their 10th anniversary.
With over 200 million registered users.
Wow. 200 million.
Yeah.
I look at this and I don't even really see video games anymore. I see like digital country clubs.
Oh, that's a great way to put it.
Because once players invest a decade into a game, building social capital, getting rare cosmetics, the switching costs are just insurmountable.
Right. You're not quitting a game. You're abandoning an entire community.
Exactly. But keeping a 10-year-old game alive is like keeping a TV show on the air for 20 seasons. It requires constant reinvention.
And NetEase has a vice grip on that domestic audience. But as you mentioned earlier, to really justify their valuation, they have to prove they can grow.
Which brings us to the other side of the barbell, the global breakouts.
Right. And the big story here is where wings meet.
Yes, where wings meet. This is an open-world wuxia game, right?
Yeah. Wuxia being the traditional Chinese martial arts fantasy genre.
Now, Western markets are notoriously difficult for Chinese wuxia games to penetrate. The cultural translation barrier is just huge.
Usually they completely fail in the West. But where wings meet is a global phenomenon.
It really is. I mean, it maintains a 78% positive rating on Steam after 17 months.
Well, actually, quick note on that timeline. Management mentioned the official overseas launch was in November 2025.
Right.
But in the Q&A, they mentioned the game being out for 17 months.
Ah, okay, so they staggered it.
Exactly. They used a staggered launch to polish the mechanics and balance the economy domestically before really pushing it in the West.
That's super smart. And the recent version 1.6 update actually hit number 2 on Steam's global top seller chart.
Number 2 globally is massive. And a huge reason for this success in the West is their commercial model.
Because Western players hate pay-to-win mechanics, right?
With a passion. If a wealthy player can just buy a statistical advantage, Western PC players will immediately review bomb the game and abandon it.
So NetEase used a free-to-play, non-pay-to-win model for where wings meet.
Exactly. They combined ultra-high-quality graphics with a monetization model that only focuses on cosmetics.
So you're paying to look like a cool martial arts master, not paying to actually win the fight.
Right. And it completely neutralized the main reason these types of games usually fail in North America and Europe.
That is a masterclass in localizing a product. But it's not just their own IP that's booming, right? Their strategic partnerships are also driving huge numbers.
Oh, absolutely. The Blizzard partnership is thriving in China right now.
Yeah, they've got the World of Warcraft Midnight expansion.
Plus Diablo 4 Lord of Hatred and the Diablo 2 Resurrected DLCs.
And all of those are driving massive monthly active user increases.
But we also have to talk about their mastery of live ops, live operations and IT crossovers.
Yes, because here is where it gets really interesting. Look at Marvel Rivals.
Yeah, they're tying their Infinity Saga roadmap directly to the upcoming Avengers Doomsday movie.
Which is brilliant. Every time Disney runs a trailer for the movie, it's basically free advertising to the NetEase game.
Exactly. And they do this across their portfolio. Eggy Party integrated My Little Pony to just completely dominate the iOS charts.
It's like they figured out how to manufacture revenue spikes on demand by plugging into existing cultural hype.
Right. So they have this indestructible domestic baseline, and they are using it to fund these highly efficient global launches.
Which brings us to Section 3. We've established they have a vice grip on the current market, but what is management's roadmap for the future?
So we have 2 major upcoming titles to dissect from the guidance. First is Sea of Remnants.
Okay, Sea of Remnants. They are targeting a Q3 launch for that one, right?
Yes, Q3. And management confirmed in the Q&A that the monetization for this game will strictly focus on character customization and cosmetics.
So they're sticking to the playbook, avoiding those pay-to-win mechanics that alienate players.
Exactly. They know what works now. But the really highly anticipated one is Ananta.
Oh, Ananta. This is an urban open world game. And management was very explicit that they are not rushing this to meet some arbitrary launch window.
Which is such a green flag. But the Q&A regarding Ananta was really fascinating.
Yeah, because they were asked how they plan to compete with upcoming heavyweights. I mean, they are going up against games like GTA.
Right. And management has this really interesting philosophy. They've told investors they don't view the open world genre as a zero-sum game.
Meaning one game winning doesn't mean another game has to lose?
Exactly. They believe great games expand the total market. They bring dormant players back into the ecosystem.
But still, imagine trying to launch a new open world game in the shadow of GTA. Is that philosophy really enough of a moat to protect their investment?
Well, Ananta is differentiating itself in a very specific way. They're focusing on urban life.
Urban life. What does that actually look like in the game?
Instead of just map size or combat, it's about shopping, running virtual businesses, social interactions.
Oh, wow. So it's more like a virtual city living experience.
Right. It's targeting a demographic that treats games as a virtual third place to hang out, rather than just a cinematic action game.
Okay, that makes a lot of sense. Now, there was one more piece of the forward-looking guidance that caught my eye, the AI integration.
Yes, this is huge for their margins going forward.
They mentioned the continued rollout of their Confucius large language model.
And AI tools like Lobster AI across their Udeo education and smart devices segment.
Right. And when you apply that kind of AI to game development, suddenly the cost of producing massive open world starts to drop.
Exactly. It functionally crowdsources the content pipeline and heavily contributes to that gross margin expansion we talked about earlier.
So what does this all mean? Let's transition to the final segment, moving from the operational guidance to the final verdict, Section 4, the bottom line.
Let's look at the balance sheet.
NetEase is currently sitting on a fortress of a balance sheet. They reported a net cash position of 157.5 billion RMB.
Which is over 21 billion US dollars in absolute liquidity.
21 billion.
Yeah.
And they are aggressively returning that capital to shareholders, right?
They really are. The board just approved a dividend of $0.720 per ADS.
Plus the share repurchases. Under their $5 billion program, they've already repurchased 23.2 million ADSs.
Yeah, for approximately 2.1 billion US dollars.
Okay, so time to be opinionated. Where do you stand on this stock right now?
I take a definitively bullish stance here.
Definitively bullish. Why?
Because the actionable takeaway for you, the listener, is that if you are holding this stock, you are essentially being paid to wait.
Through the steady dividends and the massive share buybacks.
Exactly. The business is fundamentally de-risked right now.
Because their legacy games are just printing cash. I mean, 3.9 million peak users on FWJ alone.
Right. And that legacy cash flow completely funds their ambitious global pipeline without stressing the balance sheet at all.
It's honestly a rare combination. You are getting a value stock because of the dividends and buybacks, but it's also a growth stock because they are expanding globally with titles like Where Wings Meet.
Yeah, and that 15% jump in gross margins we talked about, that is the ultimate bullish signal.
Because it proves they're scaling their revenue highly efficiently.
Exactly. They are keeping the money they make.
All right, let's quickly recap our 4 Talk Tickers takeaways for the listener today.
Number 1, massive margin expansion. Hitting 69.4% overall is a structural anomaly driven by bypassing platform taxes.
Right. Number 2, the legacy games are immortal cash cows. They have 25-year-old titles hitting peak concurrent user records.
Number 3, management is heavily prioritizing quality over rushed launches, especially with Ananta.
And finally, number 4, a $2.1 billion buyback execution makes this a highly bullish hold.
It really paints a picture of a company operating at absolute peak efficiency.
It sure does. But before we wrap up, I knew you had a final thought you wanted to leave the listener with today.
Yeah, something for everyone to mull over. NetEase just proved they can take a very niche, culturally specific genre, like Chinese wuxia, and make it a massive top seller in the West with Where Wings Meet.
Right, which nobody thought was possible.
Exactly. So, if they apply that exact same development muscle and that cross-cultural localization to a universally understood genre like the modern urban open world with Ananta...
Oh, I see where you're going with this.
Right. Could a Chinese developer realistically dethrone Western studios at their own game?
Wow. That is a fascinating question to ponder. If they pull off the urban open world better than the established players, it completely rewrites the competitive landscape.
It absolutely does.
Well, that is all the time we have for today's deep dive. Keep digging into those kickers, and we'll catch you on the next one.